All right, good morning. Can anybody hear me? I'm not quite sure. I know I'm broadcasting, but I can't see it on my feed yet. Maybe somebody can let me know if they hear me or see me. Well, not see me, but see the charts anyway. All right, now I can see. Can everybody see the screen now before I get going? Maybe type it. I know some of you guys are in the FXIT chat. Maybe you could let me know there, or let me know in the chat next to the feed. If this goes without a hiccup this morning, it's going to be absolutely amazing. So I think Ben's on at least. Can you hear me, Ben? All right. Well, I'm going to try and pay attention to the chat room, and still shows offline. Okay. Well, I'm going to get going then. Ben says there's some feedback. I'm going to keep an eye on the notes as we go. I'm just going to go through 5 or 10 minutes of what we normally do on a Monday, and just let me know if I got to work on some stuff. I'll work on it. So you can see the news. Obviously, we're not paying attention to much except for Tuesday. Today we've got some CPI coming up, US CPI. Other than that, not a lot of red tag stuff. Tomorrow's the big day, right? We all know what's coming tomorrow. So I don't think we need to spend a lot of time on the news. This noon to 1 o'clock, the rate statement of the press conference, that is going to be the place where it could be the most volatile I've seen the markets in a long time. So I'm I just want it to be over with. That's pretty much my thing. I just kind of want to go to sleep for the next 48 hours and just get through this and then come back and trade, because I'm kind of done thinking about it. But that's and then after that, there's really not much in the way of news for the rest of the week. So hopefully we can get through that and finally make some trades. DXY, this is what this is what I was talking about for a long time. Okay, on a weekly chart, this thing's still in continuation mode. Okay, this is not. Excuse me, trying not to cough in you guys' ears. As you can hear, I still haven't gotten over all of this this cold crap. So this is definitely still in a continuation pattern for me. Okay, you've got a great stack here on a weekly chart. It's hard to see reversals out of this. Like I said, it would take an unexpected event by the Fed to get this to reverse now. It would take no rate hike and possibly negative rates or some QE4 or some kind of other intervention that would weaken the dollar for this to really, not continue out of this pattern. So if we look at it on a 4-hour chart, that's what I had up before. This little pattern here, well, not even really a pattern, but this little move here, and we'll look at it on the euro in just a second. This little move here, if this breaks back to the upside, you could see a retake of the 200 and potentially try for a new stack up on the 4 hour. So I'm definitely not a dollar bear. We all kind of knew that this correction was going to happen, but it just all depends on tomorrow to see. Still could be a move back to the upside. So it's not working in the UK. We'll have to figure out what's going on with that. Sorry about that. So I'm gonna stay on TradingView. I think the charts are easier to see than MetaTrader for this kind of thing. So one of the most interesting things that's been happening over the last few days, if you have been watching it, is the break and sells on euro. Okay, this was the first. That was the first move after the ECB, and then we've been getting these little break and sells every time it breaks up. Right now, it's being sold off relatively, with relative strength, right? So I'm not 100% sold on this rally. This is, like we said, this is just the inverse of that DXY we just looked at, and that would be the same trend line, right? And if it broke down here, I don't see how this just continues to nowhere. I actually think that we'll see that little bit of move back. Trying to make this bigger. Huh, interesting. Sorry about that, man. We'll see if we can get that. We'll see I'll see what's going on with, maybe YouTube Live does have some kind of problem. I don't know, but we'll see what we can do about that. So this is how I'm viewing Euro US dollar, and I don't see how it doesn't break down out of this channel, or not this channel, but this uh, just this move up. So let's just move on. I think Euro. This is how I'm viewing Euro, and you know the liquidity that I'm looking at on Euro too. I talked about it briefly last week. You know, this is the weekly chart, and the way that this happened. Okay, 105.40, I think it is. No, 105.20. Okay, the way that 105.20 played out at the ECB, they left, in my opinion. Okay, this is just how I view things, but look at how they left those stops there. Look at how they created this sort of idea of a double bottom on a weekly chart and you could see it on a daily too, of sort of this idea of a double bottom. But I don't believe it's really a double bottom. I don't think that, you know, if I see DXY as a continuation pattern, okay, then I am going to see Euro US dollar as a continuation pattern as well, right? Just in the other direction. So I'm not, and I think if we, I think we're hitting a 50% fib on this right now, if I remember right. If we look from this structure, yeah, we're right at a 50% fib right now. It's finding resistance at a 50% fib. If we look from this main structure, which would be huge, we're sort of at a we're in between a 382 and a 50. So it's, look, in my opinion, in my experience, these kinds of huge trends, they don't just turn on dimes, right? They don't just turn around for no reason. A Fed stimulus where they said, okay, we're switching our role now and we're going to QE4, that would probably do it. I mean, that would be something where you could say that, okay, well, things have changed now. But if we look at sort of where this thing stands in longer term, okay, I still, I don't know, I still think that it's got, how's this look? If we look at this entire, if we went super wild here and we put a fib on, oh, where did my fib go? That's it. Sorry. Trading view newbie here. So if we looked at this huge move here, I think at least it goes back to a 786, right? I think you know, 101.60, somewhere in that area seems to be idealistic for, you know, these types of wicks here with the liquidity right here and the liquidity that they've built in here. It just seems like a 786 is totally within reach. Okay, I'm not totally done with the Euro US dollar downtrend yet, I guess is what I'm saying. Continuation patterns and that kind of stuff. So I guess we'll just move on. I'm going to do one or two more. I'm not going to do the whole thing. I know you guys are all like at work and you know, doing other stuff. So what should we look at? All right, so if we look at the Australian dollar, US dollar, this is obviously a monthly chart. This one sort of fulfilled that monthly fib, right? I mean, can't see where that actually. So odd fulfilled at 786 on a monthly chart. Okay, that's kind of an interesting point that is not always remembered when we're talking about odd dollar. Could it go 886? Absolutely, it could. If we get you know, if the RBA decides to cut rates, like I think I just saw that they were talking about. Well, yeah, obviously we could go lower, and if the Fed raises rates and we get that initial push down, yeah, we can always we can always push lower. So let's look at it on a 4-hour chart. Like I said, I can use TradingView now because I'm not going to set any levels. Oh, dude, now we got to get rid of this fib. Boom. So on a 4-hour chart, we're stacked up, but it's not looking super strong. If we look at this, it looks like this liquidity was taken. I'm just gonna get annoying. Yeah, they nicked that liquidity and have dropped back down inside the range. So this still has what I've talked about for a long time, right? This is the same kind of situation as Euro in terms of, I still think that there is points of liquidity down here that I'm not 100% certain that they want to leave without taking care of. Okay, it would have to be a move that was outrageously strong and outrageously strong and out of the ordinary for this to not take care of these pieces of liquidity that I see on this 4-hour chart. So I expect odd to come down and work its way down here, and it's sort of like I'm going to show you on the New Zealand dollar here in a second too. Okay, whoops. So we've got 72, 70, so it's about 200 to 300 pips between current price and where sort of these liquidities lie. Okay, so I'm expecting moves back down into these areas. It seems like the right thing. It seems like where most of the orders would be stacked right now, where most of the stops would be stacked, and if they start pushing this down, you could start to see some breakout stuff along the way there. Let's look at New Zealand dollar in terms of structure and inventory trades that I would put. There's really none that I would put on right now. Okay, this sort of has turned to, it's sort of in this down move now inside of the stack, and it's not really a conducive place for adding orders or taking inventory trades. But I think sometime in the near future we'll be able to break out of this and find some pretty good trades on odd dollar. So New Zealand dollar has the most interesting look to it of any of them right now, and it's because of I've talked about this a lot before. I still think interesting. Well, if you look at it on my MT4 charts, this wick doesn't go there. That wick stays within. That wick goes to about 62, somewhere in that 46 area, because this wick just ticks it, and this wick, does a break and buy of that wick, and this chart makes it look almost a little bit better, because if the wick is really there, that seems like an overshoot to me. I don't know what broker or what feed they pull this from, but I don't think I've seen a wick like that. you know, I'm going to go off of what my MT4 charts say. You know, this area right here is, you know, that seems to me like it could be a pretty interesting spot for liquidity. Okay, it's 400 or 500 pips lower, all right, and it would take an insane move to get there. But I always every time I look at a New Zealand chart, I'm eyeing this spot right here. Okay, we're about to touch the 200 on a daily basis. That could be a perfect reset to be looking, and also that little bit of liquidity right there. If you broke the 200 and broke that and sold back inside of it, okay, it goes with all of this stuff. Okay, if there are places where it just looks like they're gonna try and, like, if you look at euro, I forgot to mention this, but it looks like they're just gonna keep pushing that top just a little bit and you know, breaking sells just to take out the liquidity and take out the people that are trying to get short the US dollar. And then at one point they're going to be able to drive it lower. Well, I think if you did this with the New Zealand dollar, you'd find the same occurrence. Okay, if they drove the 200 and drove this, they'd then have what they need to drive it lower. Okay, and if you look at let's just look at oil real quick. Oh, thanks, Jason. Jason says that TradingView charts plot both bid and ask, so wicks and tails are bigger. Okay, cool, interesting. You'd think that would just be the bid price though on a lower tail like that, and you would think that they would be almost the same, but maybe not. Maybe they maybe they got somebody to buy some down there. that would have been a heck of a trade. So where are we at? US oil. Okay, US oil 32.80 is my line. Okay, if you think about the, you know, I'm trying to make this not confusing. If you think about the inverse of what we've been talking about on euro and New Zealand, sort of these areas where they need to run before they can reverse it. Well, oil would need to run 32.80 before you could send it back down, right? Or back up. I'm sorry. You know, if you look at those areas of lower liquidity on odd dollar, if you look at the lower liquidity on euro, if you look at the lower liquidity on New Zealand dollar, okay, they're a lot farther away from those areas than oil is from 32.80. But it seems to me like, look, 32.80 is important. If I haven't shown it before, 32.80 is important because of this 2009 bottom here. Okay, and it goes way back to early, well, not early, like prehistorically. Okay, oil trades lower than 32.80, then dinosaurs didn't buy it. No, it's this area of support, and it's an area that if we see it break, you're either going to see oil in the high 20s, and it's going to stay there for a while, or you're going to see this break and buy here, and you know, I'm going to do a video later on today, or maybe another session or something, I don't know, about the risk on, risk off, and this is still dollar positive move here. Okay, this is still a move that for me to turn a dollar bear, would oil need to break 32.80, okay, and then be bought up and back inside that is anybody else buffering? Ben says the stream's buffering on his end. Is anybody else having problems with that, or is it coming through clear? Okay, cool. Well, I'm only going to go on for another minute. I've already gone long enough. Okay, good. It looks like it's just your problem, Ben. Stop eating those. Oh no, that was Jason that was eating that sandwich. Um, so I really think that oil needs to push this low before anything's going to turn in the market. You can't call a bottom on this until this move happens here. That's just my opinion. Um, um, so that's how I'm looking at all of this stuff working together. I'm seeing these levels that in my you know creative brain, or my crazy brain, or whatever you want to say it. I see these levels on all of these trades, that or all of these pairs and assets that need to be pushed, right? I mean, I think if I remember right, I had a level on I don't remember what it was. Maybe it was 1,000. Anyways, uh, gold is not showing a dollar correction coming. Okay, gold is showing that it wants to push lower, and it wants to push towards $1,000 an ounce, and that's not dollar negative. Okay, it would take Titanics don't turn around just by accident, right? These things that have been created over weeks and weeks and weeks and weeks, they don't just go away because because uh, because somebody thinks they're going to. Okay, they take a lot of time to turn. It would take a lot of time to turn the gold market right now. Okay, and when we talk about risk on, risk off, this is sort of the the go-to asset for risk on, risk off. Okay, if dollar if the dollar is going to be bought up, okay, if the dollar is going to be taken in because people are afraid of, this is what's happened in the past anyway. Okay, I'm not saying it's what's going to happen now, but what's happened in the past is people have taken in dollars to because it's the most stable asset. They buy treasuries and they hold dollars, and that pushes on risk assets. Okay, anything that gold's going to lose value, oil's going to lose value as dollars appreciate, and obviously more risk associated currencies are going to lose value. Okay, and so we can still see that right now. We can still see that gold's losing value. We can see the oil's losing value. We could see that while euro had a out of the blue surprise pop, it's still not out of its longer term downtrend. Okay, so taking all of that into perspective, okay, I think that here's one thing I do think could happen. Okay, I'm gonna end on this because I could just, live feeds are really bad for me because I could probably just go on forever, and that would not be good. So let's see if I can find the right. I think a daily chart would be the best to look at this. Okay, so think of it in terms of if the Fed raises rates. Okay, here's what I could see. Good, man. I'm glad you heard that. Here's what I could, if I'm just being imaginative and creative here and thinking about, okay, what could happen if you were going to see an actual turn in the dollar. Okay, I think that no matter what, no matter how priced in a rate hike is, if on Wednesday they actually come out and say, okay, we are raising rates, I could see fairly severe moves, dollar positive, okay, that come down and take out all of the liquidities on everything that I've been talking about. Okay, all of these levels on everything that I've been talking about, and then everybody wakes up and finds and has this epiphany and this understanding that, oh wow, maybe they're just going to lower them again, at the next meeting or in a couple of months because the economy can't handle it. Okay, they had to do this to push oil lower, and they had to do this for political reasons or whatever because nobody in their right mind is saying that the economy, the numbers coming out of the economy, constitute a raise, and we're already 7 years into the cycle. So, we're a little bit late on the idea of raising rates now, but they have to. Okay, they have to. They said they would, and they have to. And so I could see this move, and then I could see this move. Okay, maybe within the day, back up inside of this. If this kind of thing happened, okay, I would become extremely hesitant to be a dollar bull, and I would be starting to bide my time to find dollar shorts. Okay. Then again, if this cracks down and we end down here, and then we push these levels and retest, then you can start thinking about a longer term correction, or I'm sorry, follow through on the dollar. Okay, that's if you take that scenario and you apply it to everything that I just showed you: oil, New Zealand dollar, Australian dollar. Okay, not so much gold. There's not really that kind of liquidity built up in gold. That support at 1,000 would be interesting to break, but it's not the same concept. But if you apply this kind of theory to all of those things that we just looked at, that's sort of the picture that I'm looking at. And if I had time, I'd do UK dollar CAD. Okay, dollar CAD at 134, same kind of idea. Okay, it's 200 pips away or 250 pips away. Could it bust that and then sell off? Absolutely. So that's how I'm looking at things. Obviously, again, today, guys, I'm not setting any levels. I'm not doing much of anything until after Mrs. Yellen, which I would much rather call the stash. I don't know if that's appropriate or not, but that's my nickname for it. Until this thing's over, I'm laying low. I'm trying to take some LTF stuff, but overall the levels trades just are not worth the risk to me right now. So, because you're going to run stops, you're going to run levels, you're going to run, the volatility is going to take away all security you have in knowing that structure is in play at that point. Okay. And once you take structure out, it's fair game, or it's free game for everything. So, that's how I'm looking at things. I guess if y'all have any questions, I'm more than happy to answer them on anything. I know y'all got to get back to work, but this was pretty cool. I hope it worked well on the other end. I hope. Well, her and Ben says, does she have a mustache? And her and Bernanke look so much alike to me. They both kind of look like. Well, she kind of looks like a dude to me. So it's my pet name for her. I hope this worked out well. This is something I'd like to do more often. I'd like to do some more live trading stuff. I'd like to do some more, analysis like this instead of sending out videos. Hopefully it worked. The recording, I'm going to put it up underneath this live feed. If anybody wants to watch it, and we'll do it again, but I'll talk to everybody in the chat room. All right. I'm out. First live FXIT broadcast done. See ya.